Hey guys, in this podcast, we're going to talk about trading and really focusing on the ins and outs that could help you capture some big trades, at least reflect on this week of trading so you could take some practicalities from it and apply it into your trading. I'm not going to be spending a lot of time in explaining our base case. You guys should know this by now. It's stagflation 2025. Inflation's going higher. Economy's slowing. Each day at this point, we're getting a confirmation of stagflation. So there's no surprise that market makes a move to yesterday. It makes another move today, which is going to resolve into a move 3 come Monday. So for those of you that are unfamiliar with the patterns of a move 2 and a move 3, basically it's a move 2, a back-to-back move 2 represents a market that is initially in the beginning of the trading session moves higher, and then not only does it surrender all the gains, all the green candles that look so positive early on in the trading session, they disappear. And on top of that, the market ends up making into the negative ground. And yesterday was a predecessor to what you've seen in the markets today on Friday. But the formation of the move, it's identical. Initially, the market moves higher, everything looks good. And if you just understood that pattern of a move too, there's no reason that you wouldn't have been able to capture some highly contradictory trades in the market today, such as coin puts. We started shorted coin at the open. For those of you unfamiliar, coin actually had some highly positive news overnight. And if you were trading with a 13 market moves coach, you actually were able to go into coin calls and MSTR calls yesterday into the probability that initially both of these names were going to open higher. And when they did, we collected gains on the calls, which were substantial on coin trade, but not much at all on MSTR trade on the call side. And then we reversed both of those trades into puts. And the move 2 pattern played out perfectly. For example, on coin, some of the traders were able to lock in anywhere from 20x up to 70x, guys. That's right. So for those of you that may be thinking, how do you lock in a 70x trade in a single trading session? Well, you have to capture a move like this that is highly contradictory, where it looks like, well, Coinbase got some highly positive information. How can it drop today on such good news? They finally dropped the lawsuit. Security and Exchange Commission finally drops the lawsuit against Coinbase. And so Coinbase actually opens up about 16 points higher. Pre-market it trades, 270. And then it finishes the day close to 230. So that's the kind of swing when something actually reverses the trend. Something that seems so positive that how could it possibly go negative for the day, and yet it does. And so move 2, you make a lot of money when you short something that bounces and you catch that bounce, such as was the case with a lot of stocks today. Coin MSTR is basically pretty much all of our traders traded this week on calls and puts. But there was a plethora of other trades with the same type of pattern. For example, ticker FIX. So the stock initially moves higher after the earnings report. We shorted ahead of the report and we shorted after the earnings report. And needless to say, that's a 50-point move. Almost 60 points on FIX if you shorted it this morning when it opened around 420, ended the day 350s, 360s area. So huge move. Another similar pattern, and I know we haven't been trading travel stocks. We caught some crazy wild fucking ass trades on RCL puts this week from the travel sector. Today, we caught a nice trade on BKNG. We did buy BKNG puts yesterday ahead of the earnings report, and we bought them this morning on the bounce. And that was a wild ride because initially it opens up a couple hundred points higher instantly, within seconds. Not seconds, but like few trading minutes. There was a point shortly after the market opened. It drops literally 150 points within a few trading minutes. And so those puts we were buying in the morning, I mean, they instantly go like 5x within a few minutes. And then it bounces. We shorted again on the bounce. And after that, it makes a 250-point drop. So just colossal trading opportunities are based on exactly the opposite of what everybody else is doing, which is buying the dip. And probably, I mean, I can break the trade after trade after trade. Mercado Libre puts, same thing, shoots up almost 300 points, loses a lot of traction, loses a lot of momentum for the day. Those puts make a ton of money. Simple puts were made like basically everywhere, guys. If you shorted anything on a bounce, it made money. Now, clearly, there's some stocks that banks are really unloading a lot more because they have moved up higher quite a bit more. One of the most stubborn trades recently over the course of the last couple of weeks have been Meta puts. We've been shorting Meta every day since it was up 13 days in a row. And so for 7 days, that son of a gun stock just keeps going higher every day, but on very light volume. And every day, yeah, it's in the news. Yeah, Meta makes another high. It makes another high. It makes another high. But guess what? If you look at the chart, if you really zoom in on the chart, it's a bullshit move higher. What I mean by bullshit moves higher, there's no substance behind it. Like, you know, it is a clear topping pattern. Any topping pattern, you guys can study all the patterns on the charts. The number one main characteristic to pay attention to when you are a short seller, when you make money when things drop while the rest of the people are blindly buying calls, the number one component to pay attention to is the volume when something is moving higher. Yes, it could, just because something is moving higher and lower volume does not necessarily mean it's just, it's just going to all of a sudden reverse. But there are moments where some other criteria kicks in the market that derives from just meticulous observations day in and day out. So just Meta being a stubborn trade, I personally was wrong on Meta for like 7 days straight, and it goes higher every day, 2-3 points, until, hey, we get all the money that we lost on the Meta last week times 10 this week because it hits a level of 740. If you've been trading Meta with us, you know that's been a big money maker for us this week. Within 2 days, it drops 40 points, and then today it finishes almost at 680. And fuck, I wouldn't be shocked if Meta hits 580 next week. So, based off the pattern, guys, you have some key stocks in the market, such as Meta, which has been the strongest stock among the big 7 names, that is now folding. And when I say paying close attention to a lot of other market signs, what I mean is paying attention to such components on the chart as where the indexes are making a particular pattern. In the trading group, I sent out a message saying that, hey, I said on Monday, I said, we're getting close to a double top. On Tuesday, I sent out a message confirming, say, hey, we got a confirmation of a double top on the market here. And what that really means, if you go, like, you're not going to be able to notice these things if you're simply looking at a 1-day chart, a 5-day chart, which you should be looking if you're a day trader, as a swing trader. But like for you, as a trader, it's always important to take a step back and glance at the bigger picture. So if you go look at 1 month chart, 3 month chart, 9 months, I mean, you'll see that market in December have set a high. I mean, we trade options on futures here. So if you look, depending on what you're looking, SPX, S&P 500, or if you're looking at /ES futures, S&P 500 futures, so that number could be a little bit off. But basically, if you're looking at the futures, S&P set a high of 61 63 in December. And it dropped after that. Remember the big fallout we had in December after the Federal Reserve meeting. And then it gained all the losses since then. And this week, Monday, Tuesday, it was getting close to that level. Well, shockingly, it couldn't even hit that level. It got within 4 points away from that level at some point, and it, the market started slowly falling apart. So, and I think it is the way the way the market was falling apart that was not making it apparent to the market participants that the bull run is completely over. I mean, this is not what you hear in the news. If you hear in the news, every Wall Street analyst will tell you this is the greatest bull run in history. It's going to keep going higher and higher. It's never going to stop because the fundamentals are so good. But yet, every day we're getting data that clearly proves the opposite, that the fundamentals are total shit. And you have GDP drop, and you have retail sales drop, and you have, day by day, you have consumer confidence was a big one today as far as the economic data. That thing was down bigly, as Trump would say, bigly. But I've got nobody to thank more than Trump for such a beautiful setup in the markets, right? So we're grateful here at 13 Market Moves for Trump creating all these beautiful trading opportunities. And, the only people that are going to be bitching at Trump are the people that don't know how to short the bounce, how to, buy puts at a moment when it is so apparent that shit is about to collapse the fuck out. So the point is, look at the patterns. When you're trading, look at the patterns. Spend a lot of time on looking at charts and patterns. And how do we nail the meta trade? Finally paid out bigly this week. Oh, just because the trade didn't work last week, we didn't stop shorting meta this week, right? You got the strongest stock, makes the high, all-time highs on Monday, literally within trading hours when the entire S&P index makes all-time highs, and then both of them fold. So particularly when you see the strongest name begin to fall on a move expansion. And what I mean is this, okay, so Meta goes $2-3 high practically every day for 20 fucking days. We start shorting it when it's up 13 days in a row. So 7 days we're wrong, but last 4 days we're so fucking right. And the reason you make so much more in the last 4 days is because of the size of the move, right? It was going high at $2-3 a day. But now it's going lower. There were days this week when it dropped by more than $20 in a single trading session, which is still, right? I mean, what? It's not like I can't, this thing, there's going to be a day next week, Meta's probably going to drop like $50-$60 in one day. So, and if you paid close attention to the last podcast, I've given you the clue, guys. Like, even if you weren't signed up to trade with a coach, you could have easily gotten this trade, okay? Because I said, hey, and there's one stock that's been up 20 fucking days in a row that's about to flop in a big way, right? Well, I mean, if you pay any close attention to the market, you would have known which stock that is. It was Meta. So, Meta top coincides with a double top on the S&P 500. It also coincides with a double top in NASDAQ. And not to mention the index, the Russell 2000, the index that every freaking Wall Street analyst is so in love with, right? Because their idea is what? Well, okay, well, there's going to be a rotation from big tech stocks. There's going to be a broadening of the market. Basically, instead of buying the best top tech companies that have a huge capitalization, they're going to go buy mid caps. They're going to go buy small caps. Russell 2000 is a small cap index. But none of them have a fucking clue, okay? Or some of them are finally starting to acknowledge the big S word, S meaning stagflation. There's never been a case in the history of the financial markets where you have a case of stagflation, meaning high inflation, and lower economic growth, and the market does not crash. There's not one instance, not universally, worldwide. Last time we had stagflation, severe case in the United States was 73, 74. So we're back on that 73, 74 historic analog. And there's not many things that go up during stagflation. If you study the case for 73, 74, the only thing that was going high was oil and gold, which again, if you study these charts and you overlay them to the charts of oil and gold, I mean, it's pretty easy to derive the conclusion that temporary maybe oil could have some weakness, but overall oil could go to the moon, which also would be useful to study the 2007, 2008 oil chart to understand how oil can double from here in the next few months, while the rest of the market could actually drop by as much as 30-40% when nobody's expecting it. So based off historic analog, I mean, this is going to be a phenomenal crash. It's happening, and all the Wall Street analysts that coming on CNBC and other media channels that are so highly bullish and they're so highly confident, and their level of confidence is based in the strong U.S. economy and the strong consumer, of course, right? But they're feeding you lies, guys. It's straight up, okay? It's very easy to come and go on CNBC and say all these great things, but in reality, what they're doing is they're shorting the fuck out of the market, okay? And I can tell you that this is why they're doing, because you don't have to be a rocket scientist. You can just go look at the charts, right? So I was going to do a separate video on this, and I still do it, but just for the lack of time, the market is moving, and we're going to be trading. Guys, I probably won't get to do a lot of podcasts in the next week or two, but the market is moving. If you want to trade with 30 Market Moves Coach, get in touch with us over the weekend. Be ready to trade Sunday, 6 p.m. But the point is this, okay? Wall Street analysts are fucking clueless. They're just beginning to understand that stagflation is what's happening, okay? And they're telling you that some of the greatest stocks, right? You go listen to any Wall Street analyst, ask them, well, what do you like in the market right now? What are you guys buying? Well, financials. They're like, I don't know. They're idiots. Idiots. Oh, they're all idiots. Because they don't do the simple stuff. They don't take the time to go look at a fucking chart. So if you go look at the chart of financials, okay, I just gave you a pretty in-depth explanation of the double top in the market, S&P, Meta, NASDAQ. But preceding to that, last week, if you're part of the group or if you're trading with me specifically, I told you that financials are like one of the greatest shorts in the history right now. And so what Wall Street analysts are focused is deregulation, and what I'm focusing on is real hardcore data that dates to the Trump's first presidency, when all the Wall Street analysts were also screaming how financials is the only big game in town, and financials didn't do absolutely shit when Trump, first 4 years of Trump term. What happened was, and we did catch that trade nicely, both days of the election, Wells Fargo calls, Goldman Sachs calls, all banks, right? They basically initially rocket higher, but then they freaking drop for 3 years in a row. So we just last week, okay, I've sent out a message that said, look, guys, man, credit card debt is at all-time high. So we just got the data that the retail numbers are weaker. And the reason they're weaker, it coincides at the highest credit card level debt in history. And basically, people are maxed out on the cards. If you put the two and two together, people are maxed out to the point to where they can no longer support their spending habits. with their credit card limits because they're maxed out. So that's why the retail sales number in November, December looked okay, but now it's just fallen off the cliff. Why? Well, because people all of a sudden have no ability to go run up their credit cards like they were able to in November, December, because they're fucking maxed out. That's what's happening in America. So if you understand that, then, and you look at the chart, that's what the chart is telling you also, because all the tickers, like for example, American Express ticker AXP, go look it up. It's a top, like we were shorted at 320. I mean, this thing is, like 20, 25 points lower. Capital One Financial, ticker COF. Go look at, Goldman Sachs itself is down like fucking 60 points in 2 days. Are you kidding me? Like that cannot, like financials cannot be your greatest deal of a lifetime right now. Okay, and not talking about stocks like BlackRock that's about to take the phenomenal hit. Like we're talking about big banks, small banks. We're talking about, Titanic. It's the Titanic. It's the beginning of Titanic, and everybody thinks it cannot sink. And the truth is, Titanic began to sink. So there's different sources that say, well, some people made it alive from Titanic. Some sources say nobody survived the Titanic crash. But the only people, I'm telling you, that not only going to survive the Titanic crash, but actually profit remarkably, is anyone that understands the 13 market moves curriculum and trades with the 13 market moves coach. Okay? This is a Titanic, monumental top opportunity for you as a trader. And I don't want you guys to fuck it up. I mean, seriously. So I've started this podcast highlighting the unanimous move to pattern that we're seeing in multiple sectors. Okay? I've given you some tickers. I've also shared with you that some other key areas on which the whole fucking Bull Street is bullish. If you look at the charts, they also last week just set the top and they're continuing to slide. So this is not a situation where, who bought the dip on Goldman Sachs a day ago when it was down like 40 points? Okay. How did you do? You lost your ass because it dropped another 20 points today. So, guys, when you look at this is not the moment to buy the dip. So, if you want one useful tip for trading next week, here it is. The market is conditioned to buy dips on Monday. So, like every Monday that is of substance to a trader, like to someone that puts together 20, 30, 50 X-type trades. Okay, there's been 3-4 Mondays in the last 6 months where the market has sold off in a profound way and they bought the fucking dip, right? And it dates back to August 5th Monday, which was the climax move on the drop. And it was quite odd that day that the market stopped out because literally it had some more room. It had some more room to drop. We had in the last 5 Mondays, we had 2 Mondays where, one Monday due to the tariffs, another Monday due to the DeepSeek. The markets were collapsing Monday and they bought the dip instantly. So the market is going to go after yesterday and today's 2 red days for the markets and many key stocks that are literally drawing move to patterns. They're going to go Monday, and they're going to be expecting to buy the dip, okay? Now, I'm telling you that this is not the dip that you should be buying, okay? Because if you want to understand how this works, you could just go look at Goldman Sachs. Go look at some of these financials, which began dropping, then they paused. They didn't go back up. Like when Goldman Sachs dropped 40 points in a day, it didn't go back up 40 points the next day. Okay, it stalled out for a little bit, and then it dropped again. And there's so many tickers that are doing the same thing. So we're in the pattern now where anything that's going to go higher, bounce, like some kind of bounce, you would expect. Bounces are actually your opportunities when the market is in a full-blown crash mode. That's where you enter your trades. Unfortunately, most of the traders are going to do exactly the fucking opposite. They're going to jump out on the bounce because, they're going to short the absolute low of the day, and then they're going to jump out when the market goes slightly against them. And unfortunately, that's why many people don't, put together 50x trades. But you want to put a colossal trade, guys. You want to wait for the bounce because it's going to come. But the drop Monday, guys, it's a 100% deal, okay? So you got a 2-2 sequence 2 days in a row, which is a topping move. It confirms a top yesterday. It confirms a top today. Even stocks that are actually on good earnings, right? You have stocks like, guys, one of the easiest trades we had this week. I haven't mentioned so many trades, guys. There's just been so many fucking trades, but Carvana has been one of the easiest ones, right? Good earnings, the stock collapses. I mean, from 280 down to 220. I mean, that's the kind of move that you don't get when the market is truly bullish. And what happened to people that bought Carvana on the dip? Oh, the earnings are good, man. Oh, I'm buying all I can at 250. And where's the stock at today? It's a fucking 220, y'all. So don't be doing this shit. I'm telling you, the market is going to be conditioned to buy the dip Monday. Wait for them fuckers to buy the dip. Wait for them to pump it up a little bit. People are going to be thinking that the worst is over. And then come Monday night, Tuesday, the market is going to roll over in a way that you haven't seen it. I'm telling you, the market is about to move to the downside in a way like you right now. If you look at the charts, I mean, you can't even possibly remotely, okay, imagine the fucking moves that the market is going to be making next week. I mean, come, Monday night, Tuesday, Wednesday, but don't make the mistake, okay, to short the bottom when initially everything's going to be falling the fuck apart Sunday night, Monday morning, okay? Because I'm telling you, 90% of the people are going to be going in with a mentality to buy the fucking dip. Because every Monday where we had some big sell-offs, the market has conditioned traders to do so. So you wait for them to go buy the dip, run up the prices higher. The market is going to think, okay, the worst is over. That's where you go. You buy a shitload of puts on the bounce. When options premium going to deflate. And then you go for the kill. Then the market's going to collapse. And if you nail that entry, see, it's the entries that make you the money, guys. I mean, understanding stagflation, it's basic, okay? Understanding the market is going to go to absolute hell, it's basic. But understanding when do you actually trade it? How do you trade it? What stocks? Like Carvana, 60-point drop. I mean, guys, the market has really, truly blessed us with some colossal trades this week. But this is just the beginning. This is just the tip of the iceberg. I mean, you have stocks like APP, right? Good earnings, boom. This thing goes to 520, we're shorted. I mean, where is it? What today? It's at 412, low of the day, finishes at like 417. Guys, it's a 100-point move. Within a couple of days, we're talking about the market is moving, the move expansion is happening, but yet they haven't even liquidated stocks in a big way like ASML, Nvidia. You got some wild setups out there in the market. Stocks are going to go down 20-30% next week. And, then maybe if stocks are down 20-30%, you could consider, they're down, some of them are down 20-30% this week. And I'm telling you, some of them are yet to do that. But if you didn't trade with a coach this week, guys, I mean, here's your lost chance, guys. I mean, seriously, you missed this one, it's on you. So pay attention to the patterns. Understand what a 2-2-3 move is and what is the likelihood, probability of the next move after that. Because if you can figure that out, trade it with weekly options, okay, that's it. You're done. You're like, like some of the guys gone from, 10K to 400K this week. Some guys, traded on their own, and I talked to a couple of them today, and they're like, "Oh, Leo, I'm so happy I made 2,000." I'm like, "What the fuck? What are you in the markets for? Come on, bro. Like, don't, So one guy has a 10K account, makes 10,000, from 10,000, 12,000 trading on his own. Another guy, 10K to 400K. What's the difference? Well, one guy trades with 13 market moves coach, and another guy, is happy he's making $2,000 on a day where he should be making a few $100,000. So you come to trade with 13 market moves, guys, to capture moments like that. Move expansion, right? Move expansion. I've talked to you many, many times about it. Normally, market is capturing the 60-point moves on S&P. Anything beyond that would be considered the move expansion. So today, you got to move expansion. But options pricing is pricing at 60-point move pretty much every day. Anything beyond that is not really priced. So you make money when the move becomes bigger than 60 points. So over 100 points on move on S&P 500 today gets you paid. Trades 20, 30x today on S&P futures, guys, trading options. If you're missing these, it's unacceptable, guys. It's unacceptable to miss days like yesterday, to miss days like today, to miss shorting stocks at the top of their all-time highs. Meta, how can you not fucking short it? Oh, well, Leo, but I was listening to all the Wall Street analysts. They said it's such a good stock, it's going to go higher. What are you... Fuck, man. Look at the charts. Study. Believe in your ability to beat the market. Stop listening to all the crap and all these goddamn Wall Street analysts who how can Goldman Sachs drop 60 points? If it's so fucking good, if it's such a bull market, how can you have, stocks that are dropping 60 points, like 20, 30%? Look, I didn't even get started and talk to you about some weird fucking names, like tickers like TFII, tickers like GLOB. Go look those up. I'm telling you, we're so far from a bull market. This is a full-blown bear market. And by the end of this week, everybody will tell you, oh shit, we're in the bear market. But who gives a fuck about it at that point? Like, you should have shorted it this week. You need to be shorting the fuck out of the market next week when everybody is pumping it, thinking that buying the dip is the thing. Okay, I'm telling you, buying the dip is going to be the thing of the past. But the market has not come to that consensus yet. So short the strongest fucking names, because those are the names that will get hit the hardest next week. Everybody's favorites. All these stocks that have been going to the moon, they're going to get hit the hardest, guys. But if you want to know specific tickers, specific expirations, specific strikes, okay? I had a trader today. I was new. I gave him some strikes, and he ended up buying some Monday expiration. Like at the money. I'm like, dude, what are you doing? I gave you a strike that's like 100 points lower. So the strike that was 100 points out of the money for Monday expiration went literally like 10x by the end of the day. That's Monday expiration. And it's still not in the money, but it's like they were $1. They were like $1.20. They're now like $10, $11 per contract. But he ended up buying at the money. So at the money, okay, fine. You paid $20 a contract, and now that those are worth $45. But there's a difference in how much you make. Do you get it? You buy something for $20, it's now worth $45, or you buy something for $1, it's now worth $10, $11. So, simply understanding, okay, the market is going to drop, that's not the shit that makes you money. You got to, when you trade options, you have to understand what strike is going to make you the most money. And yet, anybody you talk to, they'll tell you, well, buy at the money or buy in the money because it's the safest. Like, that is just fucking stupid as shit. I mean, I can't I can't believe that there are traders out there that completely, okay, just ignore the market conditions. It's the market conditions that allows you to buy stuff out of the money before everybody realizes that there is an expansion of the move that's taken place. So when you go on your option chain and your option chain tells you, well, this being in the money by expiration on this strike has like 11% probability, like who says that? Like that's based on recent trading ranges and everything. Like that is such bullshit. Okay? So, well, it turns out that the strike, I gave this trader, like, oh, now it shows it's got 68% probability of being in the money by the expiration. Well, it's like this information is useless. If you're looking at all these Greeks, and if you're looking at, on the option chain and the probability of, what's the probability that your strike is going to be in the money by expiration, all that stuff, it's fucking dog shit. Don't even look at this. Don't complicate shit. Okay, look at the chart. It's the chart and the pattern that's going to help you identify and get pretty close to understanding and nailing when exactly this move expansion is going to take place. Okay? So anyways, guys, be better. If you're not capturing 20, 50x, 70x trades, they're here. We got traders that are capturing them. And I want you to capture it too. I mean, that's the truth. So stop fucking around. Go to 13mmtv.com, sign up to trade with a coach, and off of making these attempts to do this on your own, because, again, there's a difference. Why one trader goes from 10K to 12K, and another guy goes from 10K to 400K. There is a difference. The way you trade, it has to do with the strikes, with expirations, your entries and your exits, damn it. That's what trading is about. You got to understand, like, the big picture. Okay, it's stagflation. The economy's slowing, inflation's going higher, and the whole Wall Street is still bullish, a bunch of fucking idiots. Well, how can I go around shorting the market here? Damn. And, most of the people, they may sit there, they think about it, they ain't going to do shit. Or they're going to be happy they made $2,000 in a day. They should be making a few $100,000. That's the thing. So, anyway, guys, enough is enough. Okay, dare to do something different. Dare to take your account to $1 million plus with the 13 Market Moves coach. Sign up. I don't care where your account is at now. It's all possible because the market is moving and the move expansion days are here. Trade them with the 13 Market Moves coach and take your account to a level where you never even thought was fucking possible. Let's roll.